Hello and welcome to this series of conversations that we're calling Beyond Oil. Now, the world is decarbonising at a rapid rate. Fossil fuels that powered both the industrial revolution and globalisation have been put on notice all over the world. And we're moving to a cleaner, greener future for industry, society and our economy. Now, however you feel about the politics of this, you should put that to one side for this series. We're not here to talk about the causes and consequences of climate change and those kinds of issues. What we want to focus on in these conversations is the enormous investment opportunity presented by this worldwide transition to a low carbon economy. And there's no one better to help us do that than my guest today, James Allen. Now, I've known James Allen for a long time. We started in the publishing business around 15 years ago. Time's gone really quick. I stayed in the business and James moved on to other things. Now he's come back. But James has been in the energy markets for more than 10 years, about 10 years experience in the financial centres of London and New York. And he is familiar to many in the energy market trading community, including CEOs from most of the major energy companies and exchanges in Europe and the US. And today he's talking to us live from the UK. James, thanks so much for spending some time, mate, to talk to us.
Yeah, my pleasure. How are you today?
Yeah, pretty good, pretty good. The days are starting to get a bit longer now, so that's nice. Winter time in Victoria, especially in lockdown Victoria, is a bit a bit hard to get through, but it's pretty good. How about yourself?
Very well. Yeah, just the opposite really. Days are getting shorter. We're not quite in lockdown, but I think we'll be going back that way very soon, unfortunately.
Yeah. Well, when we spoke previously, I must say, so it's about 2 months ago now, and I think I sent you a message the next day. We had the most amount of reader email after our conversation on the trend and the global investment trend that's happening towards renewable energy. So I figured it'd be awesome to get you back on and start this series of conversations that we want to have with all of our editors. So when we spoke previously, you told us that decarbonisation will see the largest, I think these were your exact words, the largest amount of investment capital deployed in peacetime history. So perhaps we can start there. Exactly how much capital are we talking about?
Yeah, that's right. I said sort of many times now, the reality is that decarbonisation is the single biggest investment that the world has ever had to make in peacetime. That's sort of a massive statement, but it's true. I mean, the numbers dwarf any other possible investment opportunity out there today by an order of magnitude, basically. So we're seeing sort of climate change providing a real sort of long-term structural growth opportunity for investors, one which in order to meet sort of all these sort of ambitious global sort of climate change targets will require trillions and trillions of global investments each year until 2050. So according to the International Renewable Energy Agency, $95 trillion of global investments will occur under the current plans we have in place right now. But they also say that up to $110 trillion will need to be spent to fully transform the world's energy system over the next 30 years out to 2050. So that only sort of really emphasizes the sort of the huge misconception out there in the markets really about the financial benefits of investing for climate change, in addition to the well-publicized sort of ethical merits. Many people sort of think that investing ethically and generating superior financial returns are mutually exclusive, but they're absolutely not. This is the biggest opportunity out there by a huge amount, really. So, I mean, really, and if you know what you're doing with selectivity and sort of a careful navigation, investors really have the potential to make some massive, considerable returns.
Yeah, right. So what is the political will behind this transition? Like, what kind of targets are governments chasing, and how tied to those are they?
The political will sort of, it depends sort of where you are in the world. I mean, obviously many countries around the world, including the UK where I am now, the EU and other places have set out sort of ambitious targets to cut net emissions to zero by 2050. Now, I know that obviously your government in Australia, it's resisted calls for Australia to commit to net zero emissions by 2050. I think they're offering to achieve net zero emissions by sometime in the second half of the century. But many countries elsewhere have passed laws actually to go alongside the Paris Agreement, passed laws in their own countries to go carbon neutral by 2050. So they're enshrined into law. And also, you're seeing a flood of new sort of net zero climate goals have been set in recent years by individual countries, including the UK, France, Sweden, New Zealand, the EU at large, actually, and certain states within the US, sort of in California and New York. I mean, other countries have actually have set even earlier targets than 2050. Norway, for instance, plans to go climate neutral by 2030. And also don't forget that alongside this, many countries have also banned sales of internal combustion engine cars in order to sort of stimulate growth in zero emissions transportation. So, you know, these bans are going to come into effect over the next sort of 10, 15 years, really. So it's been sort of patchy political will, but certain countries, lots of the world really mean business here.
Yeah, and I guess that's why we're starting this conversation now, because it doesn't really matter where you are. I mean, it's a trend that is happening whether you like it or not. And it's not just governments really now, it's private capitals really moving into this area too, right?
Yeah, exactly right. I mean, you've got sort of governments, certainly sort of post-coronavirus, you've had a huge amount of public money being sort of pledged to green growth, because governments, they see the futures in green growth, and where better to put sort of public money than in you know, green energy, green jobs. You know, we're in a low interest rate environment. You've got high capex wind and solar. These are the perfect growth vehicles really to stimulate growth and economic achievement really in many parts of the world. Alongside that, you're getting lots of sort of the smart money, the private capital flowing into this story as well. Really, you're getting lots of big institutional funds flowing money into it. You're also getting, you know, lots of divestment, I suppose, from sort of the fossil fuel industry, moving across into a bit more sort of environmental money as well, and funds and companies as well. You're getting some of the biggest institutional investors in the world, some of the biggest names out there, sort of pledging to put capital into these markets. So it's, you know, it's been a really exciting time in the markets. I mean, this positive situation started a few years ago, but it's really ramped up, I suppose, since the coronavirus.
I was going to ask you, actually, you mentioned the fossil fuel companies. What is, there's always a bit of a disruption when there's there's the current way of doing things, no matter what it is. And when something completely new comes along, there's that transition phase, which is a really kind of, it can be very disruptive. So you mentioned fossil fuel companies. What's Big Oil's response to this? I mean, you see that Exxon has now been cut from the Dow for the first time since late 1920s, I think.
Yeah.
So in your view, is oil a dying industry? Like that's just it? Or is there, you know, what's the near-time future for that hold for you, do you reckon?
Well, yeah, I mean, ExxonMobil, that's a really sort of symbolic movement recently. That was expelled from the Dow in early September. I mean, Exxon was the longest serving component of the US stock indicator out there, really. So it's just a sign, that's the latest sign that sort of major oil companies just aren't as important to the economy as they used to be, really. I mean, around the same time, we had sort of the energy sector in the US, and by energy here, we mean oil and gas. Yeah. That became officially the smallest component of the S&P 500. So that's the S&P 500, for those that don't know. So that's an index that looks at the fortunes of the biggest 500 companies in the US stock market. So that again was, 10, 15 years ago, that was that sector's weighting was about 15, 16%, and now it's down to sort of 2%, really. So, I mean, this is the new reality. I mean, oil majors, they're sort of coming to terms with the world is going to need a lot less of the stuff that it sells, really. Many are sort of are waving the white flag, if you like. They've declared that they're not even going to sort of look for any new oil. They're going to sort of really scale back their exploration. We had BP in early August say that they're no longer do any more exploration in new countries. We had France's Total. It took an $8 billion write down on its carbon heavy assets. That was in July. In fact, we were seeing all the oil majors. They've actually made some huge write downs of their sort of fossil fuel assets. They're really declaring that their assets, these fossil fuel assets, aren't going to be profitable anytime soon. Obviously, oil demand isn't going to go away overnight. The emerging countries specifically, they still require lots of oil. Developed nations, of course, they do as well. But I think I'm pretty confident to say that I think actually we've seen a peak in oil demand already. If it hasn't happened already, it will certainly happen in the next 2 years. And I think then we'll get a sort of a plateau of oil demand for a while, for a period of time, 10, 15 years. And then I think we really can see some significant change in oil demands fall off a cliff. We just need to look at what's been happening in the coal market around the world. And that really is the example that is out there for oil. So this is a very bleak picture for the oil majors, I'm afraid.
Yeah, right. So part of that, you say demand falling off a cliff. One notable thing that happened, especially when we first went into lockdown across the world, really, to tackle the coronavirus, was the price of oil came down, because there was just, and I think it went into negative territory at one point. But that brings me to the question of the cost of renewable energy technology as well. That's also coming down, and that's a pretty vital thing for this trend to take off.
Yeah, indeed. These costs have been plummeting. The solar sort of wind costs have been plummeting for the last 15 years, really. I mean, it's going one way. It's a one way ticket, really. I mean, these costs are going to keep going down. We've got sort of more innovation, higher efficiency, which is really sort of driving these massive decreases in costs. I mean, what we need to remember is that renewables are penetrating, because of these cheaper costs. Renewables are penetrating the global sort of energy system faster than any fuel in history. That includes oil. It's risen from 1% to 4% share of the world energy market, sort of twice as fast as oil did. So it's really a matter of when and how, not if, wind and solar and other renewables disrupt electricity systems everywhere, really. I mean, solar PV modules, the price of those has fallen sort of 85% or so since 2010. Battery packs have had similar falls. We've got, across the board, really, renewable costs have come down. We had, just last month, we saw that the cheapest electricity in history ever, and that was a solar tender going out in Portugal. That was at about 1.3 cents a kilowatt hour. That is not just the cheapest price for solar ever assigned. That's the cheapest unsubsidized contract for electricity of any sort of on planet Earth with any technology ever in history. Which really just goes to show that fighting solar and other renewables is now a losing economic battle.
Talking of the economic battle, I've got maybe an objection that many people will have, especially here in Australia, and that is prices are coming down. But how much is that due to like government subsidies and things like that? And now I know that this is probably a question you get all the time, but perhaps you want to knock that objection, or at least answer it for our readers right now.
Yeah, I mean that is a common sort of question about renewables, and of course, renewables is a relatively nascent industry, so it has relied up to now or up to very recently on government subsidies. But what I should say is that the fossil fuel industry is a net recipient of subsidies, including sort of tax breaks and other things that dwarf subsidies for renewables by an order of magnitude, really. So that we should get that clear. But going forward, we're increasingly seeing sort of the cost of renewables, solar or wind, for example, that is becoming so cheap that it's not relying on government subsidies. That price I just talked to you about in Portugal, that's unsubsidized. That's just really, really cheap electricity, really, really cheap solar power. So, the future arguments about renewables really isn't really going to be about one of subsidy or cost. It might be about technology. It might be about scaling out batteries. There'll be technological improvements and things like that, but not really at all about subsidy. The economic arguments for renewables really, they're irresistible. Really, it's a really inevitable that solar it will displace old dirty fossil fuel electricity around the world.
You talk about the challenge, maybe the technological challenges, but just take recently what happened. I think it was in California. They had the new renewables. I'm not sure how to say it, but it couldn't cope with the energy demand, and I think it pretty much blacked out. Right, so that's a technological challenge, which there's still a lot to get over.
Yeah, I mean, one of the next frontier, I suppose, of the renewable markets is really about energy storage, about really trying to get sort of grid scale functional batteries and other sort of energy storage systems in place to really capture the intermittency, I suppose, of renewables. That's the next frontier. But there's so much entrepreneurial spirit, so much stuff happening in those markets, which make it a really, really exciting place to be, really, because believe me, that is will happen. I mean, we're getting there. We're seeing bigger and bigger batteries in Australia included, bigger and bigger sort of other energy storage systems out there to really sort of drive the next sort of frontier of renewables.
So what about the investment industry? How are they viewing this transition? Like, I know there's tons of like pension firms and institutional investors that are switching to a green focus. Has this accelerated or changed, you think, especially recently since the coronavirus crisis happened?
Yeah, absolutely. Yeah, I mean, some money's been moving away, so I suppose, from fossil fuels into sort of sustainable clean energy for the last few years, really. And we've actually seen a real pickup since the coronavirus, since COVID-19, really. We're seeing, already amid sort of COVID-19, sustainable investing, that's sort of the wider picture of sustainable investing, which would include the sort of clean energy and renewables and decarbonisation. I mean, it's already a $30 trillion mega trend, really. That this is continuing to happen. We're seeing sort of big capital. It's on the hunt for innovative new companies that have latched onto this, I suppose, mega trend. And we're seeing sort of, we just need to have a look at the stock market performance of clean energy stocks compared to fossil fuel stocks.
Well, I was going to say, you're pretty much over in the UK. You've been recommending these types of plays for a long time now, and you've not been short of recommendations, have you?
Oh, not at all. I mean, the universe, I suppose, of clean energy stocks has populated hugely in the last sort of 5 years. I suppose it's crazy the amount of companies that are coming onto the market. In the only service that I run in the UK, that's seen some absolutely huge gains. I mean, we're looking at sort of 7-8 baggers in the space of a few months. There's so much excitement in this space. I mean, but you go outside my sort of portfolio, you're seeing that clean energy really as a sector. It's the number one sector out there today, really. I mean, the year to date, the US clean energy sector, it's up about 83%. So I checked this last night. 83% sort of year to date. The highest next sector is sort of gold miners. They're up about 45%. And conversely, we can look at oil and gas stocks. They're down by around 50%. So that doesn't tell you the story. I don't know what does, really.
So, it's fair to say I've seen what you've been doing. You've been pretty much killing it. You can see it. You can't hide from the numbers. But where do you think the valuations are going for companies in this space from here? I mean, they run pretty hard. Would you still say this low carbon trend is still in its infancy, or?
Yeah, absolutely.
You've got to be a bit careful,
Yeah, I mean, I suppose you wouldn't want to sort of come into this market sort of with your eyes closed and just pick any old sort of renewable stock and just hope for the best, because, as you say, that has seen a sort of quite a high sort of run up in the last few months specifically. But really, the long-term picture is quite clear, really. I mean, if you're looking like baseball parlance, it's a 4 innings game. We're actually only in the first innings. We've got all the good stuff, all the good days ahead of us, really. It's a real long-term mega trend, really. I mean, it's the biggest mega trend, I think, out there. I mean, it's both in terms of society, and also in equities, really. As I said, the numbers dwarf any by an order of magnitude, really. And so, the train hasn't left the station yet, but, I suppose it won't be long before it does. It'll be picking up speed quite quickly, I suppose.
Yeah, right. Well, here in Australia, we've got like federal and state government investment going into solar, hydro, wind and battery storage. And there's even talk of Australia being a net exporter of clean energy in the not too distant future. What about you? What about your thoughts on our markets? Do you think Australia has a big role to play in this clean energy transition, do you think?
Oh, massive. Yeah. I mean, Australia's, has all the natural advantages you'd want, really, for a renewable heavy clean energy sort of market. Really, you've obviously got lots of land, lots of sunshine. You know, Australia, I suppose, was once viewed as a bit of an isolated energy market, but it has been seen, you know, in certain quarters with certain companies, a bit of a sort of a leader, I suppose, in renewable energy in certain quarters. I mean, you know, you just need to. I've been lucky enough to go to Australia many times, and you do see sort of solar panels on the roofs. You know, you've got upwards of nearly sort of 2 million households with solar panels on the roofs, and that's forecast to grow a lot out to 2050. There's lots of change happening. I know you've already got a huge sort of big battery, the Elon Musk battery in South Australia. That was a bit of a pioneer, I suppose, in those sort of mega gigawatt sort of batteries. So Australia has a big role to play. You've got already large penetration of distributed solar PV. You've got you know, it's also the perfect environment. You've had lots of power outages. I know high frequency of power outages. You've got quite a spiky wholesale and retail sort of electricity market. Really, these are the perfect conditions for a really functioning renewable energy market. You know, get big batteries to sort of capture all that intermittency, and you know, these companies, these renewable companies could potentially make a lot of money. So, and this is that's just electricity. You know, we've also got hydrogen. I mean, you know, with this all this solar power that you have at your, I suppose, at your disposal, that can really power lots and lots of clean green hydrogen, because solar is I suppose with electrolysis you need surplus solar to sort of, which helps make green hydrogen. And there's lots of talk, lots of plans for Australia to become a massive net exporter of hydrogen. And that, I know there's a massive $20 billion project happening in Australia, which is exporting green hydrogen out to sort of some parts of Asia. So this is a really exciting project, and Australia really has the opportunity to be a bit of a sort of a growth, I suppose, leader in this sector, really. So it could be very exciting for Australia.
Yeah, and it's a very interesting time, because you have all the things you just mentioned going on, but paradoxically, we're still shipping thousands of tons of coal to China each year. Demand hasn't really dropped at all. So, but I guess this is the time now to be thinking about this trend, because by the time it's, you know, 5-10 years down the line, it's going to be really too late from an investment point of view to make those really big gains. Do you think?
Yeah, potentially. I mean, I know China. Yeah, I mean, China obviously does import a lot of your sort of iron and coal and things like that. But and that's sort of inevitable, I suppose. Certainly, sort of amid the coronavirus. I mean, fossil fuel demand, certainly in developing countries, isn't going to disappear overnight. I mean, you know, the underlying reality is that economic growth is more important than sort of climate commitments. That shouldn't really surprise anyone, really. But what, you know, there's also, you know, in these countries a massive demand for renewable energy. I mean, China last year built around 25 gigawatts of new solar. Most of that was unsubsidized. You know, Germany, that's more than, you know, Germany only has about 45 gigawatts of solar capacity on its system. So China is still building out lots of renewables. And also, you know, I wouldn't think it'd be particularly wise for Australia to really peg all its fortunes on Chinese demand for fossil fuels. I mean, you know, even in China, there's lots of studies that suggest that solar power or wind power will become cheaper than sort of coal-fired power, electricity, in the next few years, really. So that's a big opportunity for Australia as well, really, to really try and peg your fortunes outside, I suppose, Chinese fossil fuel demand. There's lots of exciting things for Australia to concentrate on.
Yeah, right. So what in your mind are the big landmarks coming up? What do investors need to, if you had one bit of advice or a takeaway today, what should I as an investor keep my eye on? And which kind of companies do you think will do well out of it?
Landmarks, I mean, the US election is going to be very interesting. I mean, that could really give green energy stocks around the world a boost, obviously specifically in the US. And obviously I'm talking really if Joe Biden wins, he's pledged to sort of renew incentives for the purchase of electric cars, eliminate sort of carbon pollution from the electricity, the power sector by 2035. Trump's obviously, he's been quite regressive really in some of his policies in terms of trying to stimulate growth in coal. So if Biden gets in, that could really provide a big boost for EV stocks, from renewable stocks in the US and elsewhere. I mean, US is obviously still seeing somewhat of a leader. You're obviously also seeing lots of post-coronavirus sort of, as I said before, economic stimulus packages being announced. Lots of these have sort of a green bent. They really are supplying a real lift to the markets and really stimulating some of this growth I've talked about before. Conversely, you're also seeing lots of green hydrogen strategies. Governments are talking about green hydrogen strategies, which has been really, really interesting. In Europe, we're seeing Spain, France, Germany, hopefully the UK, other countries, Portugal, really pledging billions of euros into green hydrogen. So that's really interesting for sort of fuel cell hydrogen stocks. They've had an amazing run recently. There's lots more growth to come. And one of the other landmarks I think it would be just a good milestone really for the industry. It might not necessarily take all the headlines or stimulate massive opportunity for sort of stocks, but it's a real sort of flag in the ground moment, and that is the world is honing in on 1 cent kilowatt hour solar. I mean, this is just dizzying levels of cheapness, I suppose, for solar. I mean, this would have been unthinkable, 5 years ago, that we would reach these levels potentially this year, maybe next year, who knows? But this was seen a few years ago just as way out on the cost curve. But it just shows just the rapid pace of change in the renewable markets right now, and that's why it's such an exciting market to be in. And
that'll happen whether Biden wins or Trump wins, I guess, in the longer term.
Yeah, indeed. This is way outside, whatever sort of Trump can do. Trump really, he pledged to stimulate growth in the coal market. He hasn't been able to do that because the market fundamentals just point away from things like coal. The market is stronger than anything that Trump has been able to do, really, because the direction of travel, because of the things I've talked about, the economics of renewables, the big sort of international commitments towards sort of climate change, net zero. These are stronger than anything that one individual politician such as Trump can do.
It's fascinating. Well, James, I feel like I could just talk to you for at least another 2 hours. So I'm going to leave it there because it's the start of these conversations, and we'll definitely be hearing from you again very soon. But really, if only half of what you're saying comes to pass, investors have a really, really exciting opportunity ahead of them, and maybe the biggest of the last 100 years, really. I mean, just look at the current grids that we're using. They're like over 100 years old, aren't they? I mean,
yeah, completely. I mean, honestly, this is the whole decarbonisation story is the biggest sort of mega trend out there. We had, we had a coal story, we had an oil story, we had a mobile phone story, an internet story. These are investors right now are lucky enough to be sort of living through this massive mega trend, really, which is renewables and really sort of like lowering emissions. It's quite providing such an exciting opportunity for investors, investors could look back on. They don't take this opportunity to really kick themselves, because it's really obvious. We all know that the world is going to get greener. That we should take that for red, really, because it is happening, and it just is a very exciting time for those that can take advantage of it.
Thanks very much, James. Really appreciate you taking the time to talk.
My pleasure.
It's a great conversation to kick these conversations off with.
Yeah, anytime, James.
Cool. And just to the viewers at home, thanks for being with us. Like I said, there's going to be many more Beyond Oil conversations over the coming days. We want to look into this emerging opportunity from the tech side, from the market side, the stock side, so that you can come away with some really exciting investment ideas. So I'll see you again very soon. Thanks for tuning in.